Crypto prices have pulled back on increased macroeconomic and regulatory risk. I'm Kyle Rodder, and in this week's Cryptoverse, we take a glance at what's happening in the crypto market right now and analyse the charts of Bitcoin, Ether, and Litecoin. Crypto assets dropped last week amidst growing market and regulatory risk. On the macro front, strong US employment data along with a beat in US inflation numbers added fuel to the hawkish rhetoric from US Federal Reserve policymakers. While traders are positioned for only 2 rate hikes from the Fed this year at the outset of 2023, futures pricing now implies 4 hikes this year, including the one that occurred in January. The value of cryptocurrencies were also impacted by the prospect of tougher regulations on the industry. News broke last week that the SEC could ban staking, effectively depositing your crypto asset on an exchange to earn a yield or reward, stifling one key area of the crypto market. Here are 3 cryptos to watch in the week ahead. Bitcoin prices broke support at around 22,800 last week, but found buyers around 21,400. The former becomes resistance now, with a break of the latter potentially opening a drop towards $20,000. $24,000 also appears to be a major level of resistance. Ether broke to the downside last week, slipping out of its short-term trend channel. Buyers defended technical support at the 50-day moving average and the $1,500 mark. Resistance remains around $1,660, while a break of $1,500 could open a possible drop to the low 1400s. The uptrend for Litecoin ended last week with a break of trendline support. Traders bought the dip around technical support of $90, with a key resistance level in the short term roughly $120, which marks a recent double top in the price.